Hi, I'm Matthew Dekert with Maxwell. Welcome to my channel. Today we're talking about banks and how they've crushed many a client's dream after they have found their dream home. And unless you can pay cash, we all need to deal with the bank. Well, what do the banks want? Let me break down the three things lenders are looking for. I see it as three hurdles. If we trip over any of them, we don't finish the race and buy your home. 1. Income. 2. Down payment. 3. Credit. Simple as 1, 2, 3. Let me explain each and how to establish credit. Let's get started.
I'm Matthew Dekert, a born and bred Calgaryan that wants to share some of the amazing things about the place I call home. I wear my colors with pride, love the summer and the winter. I'm a road-ready professional, not afraid to get my hands dirty or lend my tools and expertise to others. Let's have some fun.
First, your income. While this one seems like an easy one to answer, it's actually not. Banks do not like overtime hours unless you have a 2-year track history. Banks do not like part-time employment. Banks do not like commission salespeople. Banks do not like small business owners. Banks do not like, banks don't like a lot. 2. Down payment. It's how much of your own funds you are investing. You might also hear deposit, how much skin you have in the game. In Canada, the lowest down payment is 5% without hacks like cashbacks, which I'll review in a future video. It's easiest if the money comes from your savings. RSPs are also another great source, allowing you to withdraw now and repay over the next 15 years, no penalties. Gifts from family also work. Borrowing during the down payment adds complications, although there are loopholes. One of which is that banks usually only ask for 3 months of history. So you could get a loan today and consider buying in 3 or 4 months, moving in about 6 months. You could. 3. Credit is a measure of how much the bank trusts you to repay the loan, based on your repayment history. Without a good score, they will not fund your home. For the first-time buyer, credit is the toughest of the 3 hurdles. We often do stupid things when we are young that haunt us for years. Late payments, too much debt, consumer proposal, bankruptcy. Enduring a divorce, things can get painful. Assuming you have no credit whatsoever, here are my favorite hints to establish them. First, go into your normal bank, the bank you already use, and ask for a credit card. Any limit they'll give you. If they won't give you any credit, then get a secured credit card. Essentially, you give the bank money upfront, the security, and then they give you a card. Think of it almost like a debit card, as the bank has your money, security, but showing as credit. Capital One Guaranteed Secured MasterCard is a top choice. Guaranteed approval, but it has a $59 annual fee. I also like Home Trust Secured no fee, with almost everyone getting approved. After this, get a store card. Stores from the Bay to Canadian Tire to Walmart to Home Depot will give you a card that is good in their store and their store alone. They are highly motivated to help you shop more in their store and won't have as stringent credit requirements. Some stores also have what they call a co-branded card. Then, we slowly transition into higher limits. Slowly get better cards from bigger, more respected institutions. Start having a mix of credit, all while limiting credit inquiries. Credit is a tool not unlike a hammer or fire. While many people will warn you about credit, if used responsibly, it's amazing and unlocks future financial doors. Used poorly and, fire burns and hammer smash thumbs. It's just a tool unlocking financial doors. I hope this quick primer on the financial hurdles to home ownership helped. Even if you stumble, my mortgage broker and myself will help and advise you, getting you back into the race. I'm Matthew Dekert with Maxwell. Thank you for watching.